Pan African Resources reporting a 4.6% decrease in first half headline earnings per share. That's to 11.5 cents. Now, this despite an 8% rise in revenue to 668 million rand. The precious metal miner aims to double gold production to 200,000 ounces in the next full financial year and hopes to resume dividend payments in the next 6 months. Well, let's delve into the numbers. Jan Nelson, CEO at Pan African Resources, standing by. Thank you so much for joining us, Jan. Just looking at that decision not to declare a dividend, you're holding back cash right now. What informed that decision?
Well, we did a rights issue for about 700 million rand to help fund part of the acquisition of Evander, and it makes no financial sense to do a rights issue and then pay the cash, part of the cash back out to shareholders. So we skipped the dividend cycle this year, and our major institutions have supported that decision.
So overall, if you're looking at the numbers on a headline basis, slipping back 4.6%, so ever so slightly down, the stock ever so slightly up today, so there's not a sharp reaction from the market. But take us through the key movers and drivers of the drop back in the first half.
Well, I think the main reason for the drop was there was a once-off cost of about 9 million rand in terms of the transactional costs around Evander, and that was the main reason for that drop of about 4%. So I think that in all the market understands that there were also some increased labour costs and some social spend costs.
Let's talk about a total cash cost that you're experiencing now at Barberton. Your thoughts on the opportunity to be able to bring that down, because sitting at 233,000 and 3,000 rand per kilogram, and of course, if I calculated correctly, up 21% in the previous period. Cash costs are rising at quite a considerable rate. What are you doing to bring that number down?
Well, we've got a big tailings retreatment project, a surface project, that'll add about another 20,000 ounces of gold, treat about 1.2 million tons of material online in June. We're building that project at a cost of 300 million, and that will significantly impact on the unit cost, because that operation will run at about 200 rand a ton, where our current operation's running at about 1,800 rand a ton. So that'll have a significant impact on bringing the costs down and increasing the margin.
Looking at underground gold production, slipping back slightly at Barberton, tons milled also decreasing there. What are you doing to increase volumes?
Well, we unfortunately had a failure of one of our winders, and this is the type of thing that only happens once every 60 years. It's not a normal failure, but we had to deal with that, and we did lose some production. We also had some lockup in one of our plants, but we're expecting that to come out in the next 6 months. So nothing wrong with the ore body, not in a question that we've got an infrastructure problem. It's just, we had a failure of our winder and a bit of lockup, but we will sort those problems out in the next 6 months.
And you talk about spend on community initiatives. Of course, increased pressure from government to do that. I suppose increased pressure indirectly from what's taking place in the mining sector to do that. What are you planning to do?
Well, we've increased our salaries this year by 17% to our workforce, but not so much as a result of the government forcing us. We have 3 stakeholders in our business: shareholders, the communities around our mines, and our employees. And you have to look after all 3. It's almost like the 3 are 3 interlinked circles, and you have to keep them in harmony. So we pay a dividend, we make good returns, but at the same time, you've also got to put money back into the community, and you've got to make sure you pay your employees a fair wage. And if you do that, then I think you'll reap the benefits. And I mean, we were one of the few mining companies that didn't have any labour disruption. So I think that strategy paid off.
When it comes to the trade union, just give us some insight into the representation that you have from AMCU and from COSATU, National Union of Mines right now.
Well, the main union at Barberton is the National Union of Mine Workers, and the same at Evander. There is a presence of AMCU at Barberton Gold Mines, but they don't have a recognised they're not recognised at the miners yet, because they haven't reached a certain threshold.
Let's go to the platinum space, and of course the first sale of platinum from Phoenix Tailings Retreatment plant. What is the upscaling of that? Tell us about that going forward, and the platinum sector, your outlook on that?
Well, initially we were thinking about doubling the production from the plant, but we've experienced quite a number of problems because we've been treating oxide ore instead of sulfide ore, and we're going to have that problem for the next 7 months, and that influences our recovery. So once we've sorted that problem out, I think we'll look at expanding the plant. Platinum sector as a whole, we see the price staying where it is, but it's a very low-cost business, so our margins
what's your break-even right now? Because, I mean, the platinum price has rallied quite a lot, above $1,700 a fine ounce now.
Our break-even cost is $400 an ounce for PG.
So you're making fat margins in this part of the business.
Yes, and it's a surface operation, no underground mining, and there's only 40 people on the plant. So it's a good little business, but it should make us more money.
So what portion of the overall earnings come through from this, and how are you going to increase that?
Well, currently with the gold production being 200,000 and this only being about 6,000 ounces, it's less than 5%. So it's not that significant, but this year alone it'll generate about 40 million rand, and that's not insignificant money.
Mm-hmm. But of course it's Evander, which you continue to talk about as the game changer. What's next right now when it comes to, you've had the rights issue to secure funding for that. Do you have all the licenses in place?
All the licenses are in place. We have all the cash to pay for the acquisition. The only thing we're waiting for is Section 11 ministerial consent, and we believe that'll come through in the next 4 weeks, and then we will take full control of Evander.
And production straight away?
Yes, Evander produces about 100,000 ounces of gold. It's got a 9 million ounce reserve and a 32 million ounce resource, and quite a nice project pipeline as well.
So on the back of a cigarette box, I'm sure you've looked at some of the numbers. I mean, what type of guidance can you give to how this could increase earnings this time next year? Where could we be sitting in terms of that headline earnings number?
Well, I think on a full annualized basis, we're looking to double our production, we're looking to double our revenue and our profits. So.
So it's a significant game changer, as you continue to talk about.
Absolutely.
But the gold price, of course, is under a bit of pressure right now. $1,650, just below that. Are you concerned about the impact that could have on margins?
No, one of our strategies is we buy high-grade deposits with low cash costs, and both Evander and Barberton are operations that run at below $850 an ounce. So even in the drop in the gold price, which we can't really control, we still make significant margins.
So not concerned around all the comments that Ben Bernanke might say and the G20 finance ministers in Moscow over the weekend, and of course still making good money off it.
No, we'd be unhappy, but I mean it wouldn't impact our operations to the effect that we wouldn't make good margins still.
Yeah, and we've talked about cash costs at the business, and of course just at Barberton costs were up there 21%. You've increased your salaries, you've still, of course, electricity a big issue. So group profit margin sitting at a 49% level right now, which is something you don't really see for miners, but you still want to improve it.
No, absolutely. I mean, as I said, the volumes were slightly depressed and the profit margin was not where we would like it, we would see it. We know that we can do much better if we have the type of 6 months where we don't have the interruptions we had. So we're confident that we can achieve higher margins, and that's why we also have been quite a consistent dividend payer.
Let's talk more about changes in the mining sector in South Africa. You were at the mining in Durban, I assume, or you've been following news flow from the mining in Durban. What are your thoughts on, firstly, what government had to say to the private sector about their importance and also the role that they must play in the broader socio-economic space?
No, I think we agree with that. I think it was great that the minister put the attention on the mining sector. You know, the minister, Trevor Manuel, said it's a very important sector for the country. And I think one of the things, if you operate in South Africa, you have to put money back into the community and your people if you want to build a sustainable business. I mean, South Africa is still a place with some of the best infrastructure in Africa, great legal framework. And I think that the social spend is just what you have to do if you want to, as I've said, build a sustainable business here.
Do you think that this period in South Africa's mining history will be seen as a marker, a watershed moment, whatever you might term it as, in terms of changing the direction of the mining sector?
I think so, because I think that both government and the industry is realizing that we have to do more, and we all have to stop complaining about and accusing each other and actually work together in a world economy that's very difficult if we want to build the economy and build the mining sector in South Africa.
So are you confident right now with the comments coming through from government?
Yes, I am. You know, some comments some people don't like, but I mean, government is open to dialogue, and you know, I think if you engage with government the right way, then you know, you wouldn't have a problem. So.
That being said, of course, very much South Africa focused right now. Further down the line, do you have aspirations to look at exploration outside of the country?
No, we're only focused on mining operations, and we see some significant opportunities in South Africa. So we like South Africa, we make good money here, our management team is here. We've got a great empowerment partner in Shanduka Resources in South Africa. So our strategic advantage lies here, and we're going to stay here.
So beyond Evander and beyond making sure that you bed down that acquisition, where do you see opportunities?
Well, for the next 2 years, only focus on organic growth opportunities at Evander and Barberton. So if we make enough money and we leverage those, then we'll start thinking about other things again.